Now, South African government bonds became the first African government bonds to be included in Citigroup's influential World Government Bond Index today, a development that could boost investment inflows while reducing the cost of borrowing for the country. Joining us for more from Cape Town, Andrew Canter, Chief Investment Officer at Futuregrowth. Andrew, thanks very much for your time. You were saying off air a minute ago, we've just been included in the WGBI. Is that the acronym?
The World Government Bond Index.
That's the acronym. Tell us a little bit about why this is a historical moment.
Oh, I don't know, historical. It's possibly a backward-looking indicator. The reality is that the WGBI includes many sort of secondary market bonds. It's dominated by the US and Japan with about 60% and another 30% from the Eurozone countries. The remaining 10% is spread around another couple dozen of smaller markets, and South Africa now being included along with the likes of, Hungary and Poland and the likes of those. So it's a very good thing because what it's sort of a backward-looking vote of confidence in the credit ratings we've had for the last couple of years anyway. And in any case, it's just an affirmation of the people that have been buying our bonds in their global hunt for yield to keep buying our bonds. So Viva, it supports all those TVs we've been importing.
Mm-hmm. Yes, it was, as you mentioned, a backward-looking vote of confidence, but recently we had a negative vote of confidence in terms of the downgrade we've come through. What effect do you think it's going to have on the possibility of, what happens in the WGBI? Do we get in and we in permanently, or is there a chance of us dropping out of it?
So in order to be included in the WGBI, you have to have a certain size capital market and a certain amount of turnover, and in particular, you have to have investment grade ratings from Moody's and Standard & Poor's. Therefore, to be excluded from the WGBI, we would have to be downgraded below investment grade by both Standard & Poor's and Moody's, which at this point seems fairly unlikely. The recent downgrade brings all the ratings agents roughly in line with a BBB+ credit rating. That's still 3 notches away from sub-investment grade. So you'd have to see a pretty bad scenario coming through both in politics and in fiscal policy and possibly monetary policy before you go back down to sub-investment grade. So it looks like we're going to be in for a good while and maybe permanently.
Yeah, my sense though is that there's been while it's been a great development, etc., there's been a funny little creeping weakness in the rand over the last few days, which is counterintuitive, and it seems to be that's sort of one of the fruits of that downgrade, is that there are some concerns. I think South Africa hasn't exactly received the best press from a risk point of view around the world.
Oh, absolutely. The mining issues, the labor issues really don't play well in a global environment. And as you listen to the global news from outside of South Africa, it really doesn't sound good. So I think you're right, Chris. But the other thing, this could be a classic kind of buy the rumor, sell the news story. Since April, when the inclusion in this index was announced, or the intention was announced, that we've had another 58 billion rand of money flow into our bond market. That's taken the total for the year to date up to like 78 billion rand, nearly twice as much as we had all of last year and the year before that. So it could be a case where people were kind of loading up in advance of expected demand from global index fund trackers, bond trackers, and maybe it's going to be a bit of a pullback after. In fact, we've seen that already. The rand a bit weak.